My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just entertain, it's but to educate, it's to teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. If you told me this is where the market was headed 2 or 3 months ago, I would have thought you were insane, even crazier than I am. This radical transition over the past few weeks has just been, frankly, unfathomable. We're now buying stocks we hated and we're despising. And guess what? We were now selling short. Sell. The stocks that we used to worship. And it's all happening on the fly. The averages don't really reflect that. The Dow gaining 312 points today, S&P rising 0.79%, NASDAQ climbing 0.64%. You can't tell what's underneath, though. But that makes it much easier for those thrill seekers who want to surf the Trump stock wave. Sure, today was a bit of a reversion day, a counter show, because Apple got a reprieve from severe China tariffs this weekend. But we have to think about how to profit from this new market, even if it means making some pretty sharp changes to your portfolio. And believe me, this is something I think about every day for the club. Ahead of my Wednesday meeting, it's like, wow, I got to get this right. See, something happened this weekend that crystallized things for me. The Wall Street Journal put together this incredible chart of the stocks that are winning so far under the reign of Trump. Oh, my. The extraordinary lack of economic sensitivity, the amazing America first nature of the businesses, the pure service nature of so many of these companies, they couldn't be less like what we liked under President Biden. Rip up the old playbook. There's a new stock sheriff in town. So here's what I did. I looked at the winners so far this year from the chart and thought about which ones were good to go and which ones maybe needed to be demoted for a better substitute because perhaps they'd moved too far. Here's what I found, and I can tell you that I didn't see much of the old guard of tech and manufacturing. This is about as anti-Mag 7 a list as you could find. So let's start with what I think you can safely buy right now based on what I'm seeing. I want to begin with the obvious. The health insurance companies and the drug middlemen. United Health reports this week, and it was down today. That's a bit of a rarity in itself. And to me, that makes for a terrific buying opportunity. I think the largest health insurer can do whatever it wants under this administration. Not making a judgment, just telling you as it is. Next, I've been a fan of healthcare cover Centene for ages, CNC, ever since late Michael Neidorff used to come on the show to explain to me how his company could offer quality healthcare to a state's populace because it had control of costs and knew how to treat certain illnesses and injuries in an efficient way. I like Centene, unless Congress really passes Medicaid cuts like the House Republicans are pushing for, because running Medicaid plans is a sizable part of their business at Centene. They do it really well. How about these middlemen? I think you can buy any one of them. I like Cencora, and I like McKesson. They take almost no risk and make fortunes in a consistent way. McKesson is one of the largest distributors of both branded and generic drugs. The company isn't a pure play, though. It also develops medical record systems and provides surgical supplies, too. Cencora is a worthy competitor. I include Cardinal Health, which has all that and also offers specialty pharma and healthcare services. I bet all three of these companies will see business boom if the Trump administration messes with the pharma supply chain, which is what I'm seeing them do after the close of today's trading. Next, defense is working again. I don't know. It shouldn't be, given the pullback from Ukraine, right? But I sense maybe we're embarking on a real build-up as tensions heat up with China. I like the perennially favored Palantir, arguably the #1 meme stock of all time, with the CEO who whips people into a frenzy. L3 Harris is a combination defense, technology, communications play. You want tech? L3 Harris is the one to own. I'm loath to recommend the others because I think the administration wants to focus on cyber warfare and targeted warfighting. Those two are the best. For some reason, road building is a big theme among the winners. That means you want to own Martin Marietta Materials, as well as WM. That's the artist formerly known as Waste Management, which gets a big boost from construction. Like the other stocks on this list, you have to love how domestic these companies are. I'm thinking the road building plays are working as the money from all of Biden's infrastructure program is finally being put to work. Better late than never, although I'm sure there are Biden people who question that flip judgment. Vulcan Materials right now is the winner in the category, but I think Martin Marietta's exposure to faster growth areas. WM does well when more community roads are built. It's working right here, right now, and I think it's going to continue to do so, even if interest rates edge higher because of the housing shortage. I won't own any of these three. We have some tech that works, but it's really a very small group, and it's mostly involved with cybersecurity. Because cybersecurity, well, that's like the anti-China play, right? Have you seen the stock of CrowdStrike? This thing is a horse. 1 year after it had a computer glitch, not a hack, that shut down millions of computers across the globe, it's coming back incredibly strong. CEO George Kurtz hates to lose, and his worldwide apology tour to aggrieved customers saved a lot of business and may even bring about more business than he had. You can bet that the second half of the year is going to be very strong for this stock. Why do I say that? Because Kurtz told us that when he was here last. I happen to like Palo Alto Networks, too, because there's just so much work to do in this space. It's why we own both CrowdStrike and Palo Alto for the Job Trust. And I never violate my diversification rules. These two stocks are too good. What else? Identity theft. It's rampant. Antidote. Okta. And how about a new one? After you've been hit, what do? Well, you call in Rubrik. I say you buy Rubrik after what I sold last week when we spoke to them. I think you must have one of these portfolios, one of these stocks in your portfolio. You must have a cybersecurity stock. Now, we need some real slow winners, too. Food stocks that may be the way to go now that RFK Jr. has made it clear that he's no fan of the GLP-1 weight loss drugs. It's a total green light for candy. So Hershey and Mondelez can roar. I think you could always buy Colgate in this environment, as it's a must-own stock in a slowdown. It has been for years. Candy and toothpaste, they go very well together. Oh, and you want an upside surprise. I'm sure Coca-Cola right now at this very minute is generating one for the next quarter. It is a classic bankable stock. I don't care that it's near its high. It never is that far from its high. I don't care how boring and that it goes up slowly over time rather than like a data center stock. That's what I want. Have you seen this stock this year? It's fantastic. Now, there wasn't much retail exposure in the journal piece. You want retail, you have to take your pick of Walmart or Costco. They aren't interchangeable. They are dominant. Walmart's quarter demonstrated its scale, its breadth, its worldwide opportunity. Costco is the hoarding place, and people are hoarding like mad because they know that Costco will have the lowest prices. So why not buy whatever you need now before it runs out? Now, there's some one-offs in the journal chart that I'm really liking. Remember Axon, AXON? We had Rick Smith on. That's, wow, I got to tell you, this used to be a taser. People still think it's taser. It's a decent business, but not a big one. What this company really is now is the dominant software as a service system for law enforcement in cities all over America. Its body cam system is the gold standard. Its AI work gets rid of the drudgery of filling out reports, gives police officers more time to do their actual jobs. The bad guys plead guilty because it's all on tape. You need a utility, too. There were a bunch of them in the chart. I don't like the question thing. I go for Con Ed because we live in one of the fastest growing areas in the country. 3% yield. Provides 3.7 million people with electricity, 1.1 million with gas. No fuss, no mess. Finally, there's gold, which is defying everyone's target. How many people say gold's peaking? It's not peaking. I believe that gold is back because crypto has quietly lost its luster. I watched a guy today talk about Dogecoin. I said, which would I rather have? Gold or Dogecoin? Yeah, right? You want gold, go with the best. You go with Agnico Eagle. It's the most efficient producer. It's like clockwork in an industry that, frankly, has ceased to be as productive as it used to be. Look, I've got no illusions. After going over these companies, I see several things the winners have in common. They don't have a lot of competition. They're largely domestic. They don't need a strong economy. You can't tariff them out of existence. They have scale, and most have fat margins, with the exception of say, Walmart and Costco. You don't need to worry about China. Both those two do have Chinese operations. The bottom line, you've just been given the most boring portfolio in the world. It's exactly what you need with a president who generates too many headlines and a confusing economy is most definitely headed in the wrong direction, at least for now. Take advantage of this list. We will have down days. Keep the list handy. I'll refer to it many times. It's the right place to be even in a recession, which, again, is a possibility, given how stuck much of the economy really is right now. Let's take calls. Let's go to Jesse in Tennessee. Jesse.
Booyah, Jim. Got a question for you about Dollar General Company stock. What do you think about them? The dollar stores, they've been beaten down.
Yes. Now, here's what I did wrong with Dollar General. I first thought of it as having to do with tariffs, and it's not a good situation. What I didn't think about is how Dollar Tree is doing so poorly and getting offloaded a lot of Family Dollar, and a lot of Family Dollar stocks are right against Dollar General, and the Family Dollars are going to, a lot of them are going to close, which gives a free rein for Dollar General. So where's that lead me? Even though it imports a lot from China, I say it's a buy. Wow. PJ in California. PJ.
Hi, Jim. This is PJ from Mariposa, California.
Oh, fantastic.
I'm an investment club member, and I'm studying your 4-part on how to understand the income statement. I'm trying to become a good investor because I need knowledge, so that's what I'm looking for. But anyway,
I like you. I like everything you had to say just then. That was terrific. Let's go to work.
Okay, I bought Oracle. I pulled the trigger too soon. I bought it at 180. It's at 134. I think there's still a deal going to go through with TikTok. They're still trying to hammer it out. But what should I do with it? It's before.
Okay, I want you to buy more. I think that they're doing a lot of great things. I'm not as concerned about what's going to happen with the data centers. I am much concerned about what's going to happen with Oracle, and they are very much in charge of their own destiny. I think Safra Catz is terrific. I would buy the stock. Anyway, excuse me. Sometimes boring is better for your portfolio, and in this uncertain environment, that's exactly what I think you need. On Mad Money tonight, you called in on about a company called ABM Industries. I'm bringing the top brass to get a better read on the name. Remember, I said I liked it, but let's find out more. Given the stock's string of post-earnings declines on solid numbers, we got to get some answers. Then, fresh off a turbulent week for the tape, I'm opening up the phone lines and answering your most pressing questions because are we at a bottom? That's what everybody wants to know. And later, OPEC cut its outlook for oil demand today. And I know a lot of you have oil stocks. How low could the price of crude go? Don't miss my check-in with an energy expert. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.